Stocks around the world plunged on Friday on fears of a potential trade war between the US and China. Japan's Nikkei index fared the worst, falling 4.5%. US President Donald Trump imposed 25% tariffs on steel and 10% on aluminium. They went into effect on Friday. But the US will at least initially exempt the EU and 6 other countries. On Thursday, Trump also announced tariffs on up to $60 billion of Chinese imports. The US will also limit Chinese investment in the US in retaliation for years of alleged intellectual property theft. China hit back by unveiling tariffs on $3 billion of US goods. Now, Samantha Vadas went to Cangzhou in Hebei province in the heart of China's steel country to see how it's bracing for a looming trade war with the world's biggest economy.
Orders at this steel pipe factory in northeastern China are taking a hit once again. They've already been hurt by anti-dumping restrictions from the World Trade Organization. They're now facing a hefty US steel tariff. Only a small portion of the company's products head for US shores, but its managers are still concerned.
As soon as the policy was announced, our orders dropped really low. Buyers factor in the time it takes to process and transport the products, which takes about 3 months. That's why when the policy first came out, our orders already went cold.
Chinese steelmakers have already faced a tough few years of closures as the country tries to curb pollution. At the same time, steel prices here have shot up. And now some producers are worried about competition, particularly from their neighbours.
Beijing is ready to protect its interests. There's been talk of slapping a tax on imports ranging from agricultural products to consumer electronics. They would hit the US economy where it's most vulnerable. Elsewhere in Asia, economists warn that Trump's tariffs may trigger a much larger chain reaction. Southeast Asia is spending billions on infrastructure and will likely become the next dumping ground for Chinese steel. It could also be the start of a perfect trade storm. The US tariffs are being imposed just after 11 Pacific nations sealed a Trans-Pacific Trade Agreement. The US withdrew from the deal last year. It will eliminate 98% of tariffs in a marketplace that makes up 14% of the world's GDP. It's a sign that the global trading system will eventually prevail, despite a bumpy road ahead. Samantha Vadas, TRT World, Cangzhou, Hebei Province, China.
Qing Wang is Professor of Chinese Business and Trade at the UK's Warwick University. She says Trump's concerns over the US trade deficit with China may be misplaced.
Of course, there's a huge trade deficit between the two countries, but we have to remember that China was the world's so-called workshop, with its cheap labours, was developing from a very low standard of economy over the past 30 years. So it was developing really fast. So for a long time, the people who benefited from this low, cheap goods are actually very much global. It's not just the Chinese who benefited from such trade deficit. It is actually also the American people who benefited from cheap goods and so on. And also the profit is not necessarily coming back to China. It's probably more the profit are actually for those companies, American companies, who are making their products in China.
Chinese metal exporters aren't the only ones worrying about the impact of US tariffs. The UAE's aluminium industry is also bracing for the impact on its bottom line. Nawied Jabarkhyl visited one aluminium maker in Dubai and sent this report.
As worries of a global trade war mount, countries around the world are threatening retaliation against US President Donald Trump's tariffs on steel and aluminium. Here in the Middle East, the United Arab Emirates is one player that could be hit hard.
There's $4.3 billion worth of exports going from the UAE to the United States. 1.3 of that is aluminum.
The Gulf nation provided nearly 570,000 tons of aluminium to the US from January to October last year. That makes it the third largest exporter to the country. Most of that was through state-owned Emirates Global Aluminium. It says it's well placed to deal with the new 10% tariff. Steel will be harder hit at 25%, but the UAE could be looking to avoid that tax.
The U.S. does know that it has a wonderful trade surplus with the UAE. In fact, about $15.7 billion trade surplus, the third largest in the world. If there are going to be any exemptions, we feel confident that the UAE would be a benefactor of such developments.
Mexico, Canada and Australia have already secured some relief from the new levies, and more countries are expected to apply for exemption. Trump says the tariffs will help protect national security, but the former chief economist of the World Bank says that argument doesn't add up.
America is not anymore the only economic superpower in the world. There are other superpowers, in particular in the East, and because of that, the US would lose a lot if they were today going against the multilateralism that they contributed to build.
Experts warn the tariffs will also hurt many US businesses, especially those that rely on metals to produce their goods. We've reached out to the UAE government to find out whether it's pushing for exemptions. So far, there's been no response. But given that industries like metals are essential to the diversification plans of Gulf economies, Trump's tariffs could be a real setback. Nawied Jabarkhyl, TRT World, Dubai.
Joining me now from London is David Madden. He's a market analyst at CMC Markets. Hello, David. Great to see you on Money Talks once again. Look, we saw a very strong risk-off reaction on the markets on Thursday, coming into Friday over the US and Asia trading day. But since then, the markets have stabilised somewhat. We're seeing the Dow actually up today. Do you think the market's overshot?
I think they initially overshot, and I think they're also still waiting to find out what's going to be the next move. Let's face it, a move by the United States to impose tariffs on up to, say, $50 or $60 billion worth of Chinese imports, and Beijing's response has been tariffs on exports to the tune of around $3 billion. So it's completely out of whack, and it's possible that traders were much fearing for the worst on Thursday, and then when the announcement of Beijing's response just really sets off that, right, China have made the response, but really what's going to be the next play? Because realistically, that sort of a response doesn't really match up. It would suggest now the ball's in America's court, and both sides will have to actually hammer out a deal.
Well, let me put you on the spot there, David. I mean, what if the next step is, for example, Chinese sanctions on US soybeans or Boeing jets, for example? And then, possibly, if we go into really uncharted territories, if they stop buying US treasuries, what is the potential downside on equities? Let's just focus on equities for simplicity's sake.
I think China are going to, if they are going to target the United States, continue to target, it's going to be hitting them where they're quite weak, particularly on the agricultural front. North America, the United States is the breadbasket of North America and also a large portion of the world. We could see agricultural stocks getting hit quite hard. But for the time being, the ball is now going to be in Washington's court. And it's up to Mr. Trump to make it very clear to Beijing what exactly he wants to get a readdress what he perceives as the imbalance between Chinese and American trading. So it's now up to America to hit back, and then we could potentially see quite a sizable retaliation again from China.
All right, we'll leave it there for now. David Madden, CMC Markets in London. Thank you very much indeed.